Get it moving along. All right, looks like we are good to go. Hope everyone's having a fantastic weekend so far. What a lovely week we had last week. Can you check on my favorite Disney too? Yeah, we'll take a look at the Mickey Mouse. Man, that thing, yeah. Yeah, we'll definitely it's actually on my watch list again this week. So we'll see what happens. Yeah, what a crazy move we've had over this past week. Just watching the ES right now during the overnight session. We can see that the resiliency is pretty much continuing. If I zoom out here on the 15-minute chart, you can see where we got the ball rolling here on Thursday, where we started this crazy mad move. We even had some bear trap situation here on the daily. But yeah, looking at these smaller time frames, you can see here on Thursday, this is where things really began to get spunky here. We had this nice upward move. We didn't even come in to retest the 21 here. That's how strong this trend was. We did not get much of a pullback. It was just relentless buying, some short covering, of course. Yeah, and it was just an incredible move overall on Thursday, thanks to some big tech earnings. We've seen some good ones. Big tech's been absolutely resilient. Microsoft, Meta, and this week, of course, we got a bunch of earnings coming up this week. I think 25% of the S&P 500 is pretty much reporting their earnings. Yeah, keep throwing those ticker requests out there, and we'll take a look for sure. Yeah, it won't take me too long to go through these broader markets since everything's pretty much in agreement here. So, just doing a quick little review of the ES price action right now. Yeah, so Thursday we had this great bullish move to the upside. Then we had the overnight session. Of course, we pulled in a little bit, not much, and then Friday we had the continuation. We did get a pullback to the 21 here and here, but as you can see, we've respected this bullish trend for quite some time. Even looking at the overnight session here, you can see that we're still respecting the 15-minute 21 EMA here, and we definitely have a 5-minute squeeze that is looking to switch gears here. It looked like we started to get a little sloppy here to start things off, but we've kind of restabilized here. Even the 1 minute is a little bit better here. So everything's looking pretty decent so far for the ES. Of course, it's going to be a busy week ahead. The main thing, the main analogy that I can come up with is, have you ever seen a dog wag its tail so fast that its entire body just moves? Uh, that's pretty much where we're at, and it's welcome to the earnings season that we are in right now. So as the dog's tail wags, so does the market go. We've seen this with big tech earnings, in which the individual stocks, either based on their weighting or their outsized price movement, Microsoft, Meta, can significantly impact the index and the overall sector. And for the most part, the die is definitely cast as we go into a pretty important week ahead as far as earnings goes. We got the FOMC, we got the Fed coming up, and we absolutely started this week out with a bang. Let's see, let's go. I'll show you kind of how things look as far out, as the SPY goes. If we go over here to the SPY, you can see that trend, that overall bullish trend structure is just absolutely incredible. We broke out on Thursday, squeezed some shorts, just had a nice little buy rally here, moved on up. And finally, we can see that, any test that we've had on the 1521 has been a buyable dip. So yeah, everything's been pretty darn bullish, as you can see. Even the 5-minute. I mean, every time we've come back in to test the 5-minute 50 SMA has been a buyable dip here, and we've never broken that structure recently. So until we start to see some intraday overall weakness, that's maybe when we can start to say, okay, maybe we've reached a little bit of a top here in the market. Could come back in some. I'm not saying that it'll be a crazy pullback and it's time to buy puts. But I think the situation is there that we can most definitely buy a dip. Looking here at the overall weekly chart here and the daily chart on SPY, we can pretty much clearly see where things got a little bit hairy. You can see that, we came down to the bottom of this channel and it looked like things were going to break short. We closed below the daily 21 2 days in a row. It looked like we're going to come all the way down and kiss the daily 50 and then see where things want to come up. And this is where that bear trap came in play, where we got that daily close below and then up. We gapped up on Thursday and we have just ripped ever since. And you're going to see this in a lot of your charts where you have these nice little ranges set in place. We, you know, kissed down just a little bit and then broke back to the upside. So, yeah, and not to mention that we also closed above the 50% retracement from the all-time high up here, about 480. This is setting things up for everything to push higher, and we'll confirm that with looking at a few other charts here as well. We also have a weekly squeeze that is starting to fire long. We have decent structure on the weekly. Overall, we'd like to see the 50 kind of curl up, but we are trading above the main moving averages. So this gives us a nice little bullish check mark here. The oscillator is neutral bull, but we have plenty of bullish thrust signals. So we got a check mark here and a check mark here on the weekly time frames. Looking over here on the daily chart, structure is bullish, white over blue, blue over red. We do have a bullish oscillator, and we also have bullish thrust here. And as well as a bonus, we have a daily squeeze that is looking to do something here. So we got check marks on our structure still. We have a check mark on the oscillator, and we have a check mark on thrust. So everything is in a nice agreement here that things should continue to go push to the upside, and that any possible dip should be bought. So yeah, this is a great move here that we've had on the SPY. Closed above that 414 level. 418 is going to be next. If we break above 418, more than likely we should see a push all the way up to 430. Moving on over real quick to the Nasdaq. The Nasdaq is even more strong, I would argue, if not stronger in the near term. If we kind of zoom in just a little bit here, you still see that the trend is overall bullish. We have white over blue, blue over red, 2150 over the 200. You got a bullish oscillator, you got bullish thrust here. Very solid structure. Oscillator is correct. Thrust is bullish. We got a daily squeeze. That's a bonus. And the weekly chart it's serviceable. It's nothing. It's not the most bullish thing that I've ever seen, but it's definitely playable to the upside. And of course, that does. SPY gave you $12.40 less. Hey, there you go. This does give us the potential to push on ahead towards 330, 331.50. That's going to be the next key level that I have there on the cues. And, this is definitely leading the way, and it is pretty aligned for the most part, and attempting to have that breakout. And you can kind of see where we had that channel here, bear trap set up. Hello. Tuesday, Wednesday. Now it held up a little bit better compared to the SPY on Wednesday. And since then, we had that gap up on Thursday and pushed on higher. So bears got trapped here. I'm telling you, bring up your charts and look at those channels and see where we dipped below and pushed on through. And now we're hitting our overhead and even closing above it, suggesting that there is definitely potential to continue this move on upward with a daily squeeze. So that's definitely a bonus here. And then you're going to ask yourself, okay, what are the odds of this thing just coming back in and just doing the opposite of what we did here? So bears got trapped here. Is the stage set to where bulls get trapped here? And that is most definitely a possibility, although I think it is much left to be seen. I think the odds here are most definitely in favor of the bulls. I probably give it a 70-30 odd. There could we use a pullback? Yeah, probably, but the pullback does suggest that the pullback should most in fact be bought by the dip. And you ask the question, okay, so how do I avoid being caught on the wrong side? And the simple answer is just know when you're wrong. So if we had this close above this 322 level, let's see, that would help if I switch screens here. There we go. So I was wondering why people weren't saying anything there online. There we go. So if we look here on the cues above that 322 level, you can see, if we dip back below it, maybe some caution there, but especially if we take a dip below this 315 mark, that would be my rule if things go awry, and that's when I'll know I am wrong for sure there on the QQQ. Let's see. Moving on to the IWM. The IWM is going to paint a much different picture here. So by itself, if we take a look at the IWM, and just view this as uh, by itself, if it's just standalone, nothing else is going on, this is most definitely a short. Why is it a short? We don't have structure. So you see, compared to the SPY and the QQQ, we don't have white over blue, blue over red. Here we have quite the opposite. White's below blue, blue is below red, right? So this is a bearish trend compared to the SPY and the Qs. So we have bearish structure. The oscillator is in a bearish positioning, yellow below red and below the 50 line. And we also have negative thrust signals here on the IWM. Now, the issue here with the IWM is that it's not by itself. It has everybody else with it. It's got the SPY, it's got the NASDAQ. Tech is going to drag along the SPY. The SPY is ultimately going to drag up the IWM. So by itself, yeah, this is not a good chart. But the fact that, this is an overall market, things can drag up, kicking and screaming as it may. So if we look here at the IWM, you could argue, maybe this was a slight bear trap here. And the argument could be, well, maybe we'll come up and retest 180 on the IWM. Although looking at everything, it's still a short, but I have no reason to be in this. I'd rather not. The probabilities are easier for me out there to play the SPY and the NASDAQ and big tech, whereas the IWM, I have to deal with the financials, and especially the KRE, and we all know the trouble that is brewing out there with FRC, and that'll dig me up out of that. And we'll see FRC looking here. This is just a mess. There's nothing crazy going on. We have news day in and day out on it. It's very volatile. And if you're playing this, you're just straight up gambling. Trading should be boring and simple. When you take names like FRC or even top, if you're trading top, sure you can get lucky and make crazy off of it, but understand that you are essentially gambling. You can't predict, or you can't have good odds and probabilities of what's going to happen here. It's just straight up gambling. You just might as well go out to the gas station and buy a few lottery tickets and play it that way. So FRC, yeah, you can't play this. I mean, who knows? Are they going to save it? Are they not going to save it? Who knows? But looking at the charts, my job is not to predict those kind of moves, but my job is to look at these charts. And looking at these charts, FRC, we went from a high of 222 to now trading in penny land. That's bad. This is something that has obviously gone incredibly wrong. Management has obviously done something incorrect. We all know, everything, the banking crisis that has started with Silicon Valley Bank has spilled over to a few other banks. And obviously the Fed interest rates are not doing any justice to that. So checking out FRC, I wouldn't touch this with a 10-foot pole. I don't have any good things to say about this chart other than to possibly short it. But when you get into possibly shorting it, then you also have the random news events that can come about. Are they going to save it? Is it finally going to get a buyout? Is the last report I read, the Fed is trying to pressure U.S. Bank Corp to come in and rescue it. And if the FDIC is starting to beg financial institutions to come out here and save FRC, then it's not really a good sign. So FRC, hands down, would not really play that. And that gives me to the point. If we take a look at the KRE, which is your regional banks are holding at this 41.28. We even had a little bit of that bear trap situation where we had that close below 41.28, and now we've kind of popped back into the range. But for the most part, this is still a downward trending move. You can see that we do have white below blue, blue below red. So there is a lot of work here for the damaged goods to be redeemed. And you can also kind of see that with the XLF into the bigger banks, although the bigger banks are, of course, in better shape than these regional banks. But, for the most part, the XLF is still in an overall downward trend. Most of the uptrending names, in comparison, take a look at the XLK. You have a nice, beautiful uptrend, white over blue, blue over red, etc. You got bullish positioning on the oscillator and thrust, and everything's nice and peachy over here in tech land. And then you look over here to the financials, and you're just like, woof, what's going on here? Of course, we know we got those financial woes going on with the regional banks. FRC is a big toss up, and yeah, so we'll see. Maybe we'll get 10 more halts tomorrow. 10 more halts tomorrow will be. Do we want to place any bets how many halts FRC gets next week? Who knows? You consider buying FRC puts at $7, and I would have banked. Yeah, and there's actually a lot of it was. I think at the beginning of the week we even looked at the option chain. There was a ton of $5 puts at the beginning of the week, and they actually had to introduce new options. There's even half a cent, so 50-cent puts, 50-cent strikes for next week opening up. If we go to May, they have them open now. 50-cent puts, just absolutely mind-boggling that this thing traded at 222 and is now trading all the way down in Pennyland. So yeah, IWM, it's not the best thing out there. I don't have any good reason to trade the IWM or small caps just because of the structure, momentum, and sure, we got a daily squeeze. That may be the only good thing, is that we might try to come up and touch 180 yet again. But for the most part, if this was by itself, I would be hammering puts, hammering puts for sure. If we move on to the Dow, the DIA, 30 stocks, it's kind of sideways, neutral bull here. We did get a move all the way up to 341. We are starting to enter into a daily squeeze. Weekly squeeze has been forming up for quite some time, for a few months, and we just haven't made any progress here on the Dow. In fact, we're back at the same level that we were back in April of last year. So hooray. Congrats, we've done it. So the next level for the Dow, 343.50 and 348.20. If we can make some more progress here, you kind of see that same thing here with the Dow, where we started to break down here. We even broke down on this level too, the 333.50 level, and then shot back up. So this tells me, yeah, we touched the upper end of the range at 341. So we could come all the way back up to 343.50 and then 348.20. So everything seems to be in quite an agreement here on the Dow. If we go over to, let's make our way over to the junk bonds. And then your question is, well, why do we look at the HYG so much? The HYG is your credit spreads. It's also it's the bottom of the barrel crap. If the bottom of the barrel nastiness is looking good, then everything else should be looking pretty good in itself. And frankly, right now, this looks better than the IWM. So you could argue, you got a little bit of a bull flag here, consolidation, however you want to draw it out. You do have a series of higher lows going into this compression. But for the most part, this is overall neutral. This is kind of bearish neutral, but we're still above. And here we're above 50. The weekly, we got a squeeze. This is kind of bearish, but we have bullish thrust. So I have to, give that a little bit of a check mark. So yeah, it's still not the prettiest thing out there. And I still make the argument that this is a lot better than the IWM. And if the HYG can push on ahead, that means all the nasty stuff out there is also pushing ahead. And that would be acting as a confirmation of our move higher. Now, if we start to see a move higher in the market and the HYG completely just doesn't follow through, or if it's red, then something is lying. So, we definitely want to kind of keep an eye on it. I kind of come in and check this about every other day or end a day just to see where everything is at as far as the HYG goes. If we take a look at the dollar, and we're just going to take a look at the dollar just out of respect here on the dollar, and you're going to kind of see something funny here. Look at these candles compared to what's going on right now. And it's a bunch of these weird doji candles. There's a lot of back and forth, low price movement. It's really weird compared, even from the historical, all this was looking pretty good. And now we're getting these weird dojis. We're still kind of holding on to this 180, 160 level. And, we do have a squeeze shaping up on the dollar. This is kind of bearish, and we have an active sell thrust down here as well. Not to mention a weekly squeeze that is also trying to be bearish. If we do happen to break down, what I would be looking at here is if things break down and continue to push lower. What I don't want to see is if we get a breakdown on the dollar and say we get a close right here and it does something funny that we had with the stocks here where it closes below and then we just shoot back up into the range. If we do that, yeah, then it's got me thinking that, okay, maybe things aren't as good as it seems. But for right now, this thing is implying that it does want to push below that 182. You can see that I got a nice little alert set up here, and I would suggest doing so as well. Just set up an alert at these lows at about $100.80. I got it at 167. I think I just kind of put it there. So anywhere around this area to see if we get a daily close below this mark and get some follow through action. If the dollar continues to shoot down, then sure, that could be a nice little headwind for stocks. Moving on to the bonds real quick. The 30-year bond, this is kind of setting up for things to try to push higher. You can see that we've wrestled with this 132.18 mark for quite some time since December. If this does persist, which it should, because deflationary aspects are definitely starting to kick in, then that should break us out of this 132.18 level. This does imply that the Fed won't be so mean, they won't be so hawkish, which honestly, they don't really have a good reason to be hawkish. I think if anything, they're going to be a little bit dovish. I think we do get the 25 basis point rate hike, and then we'll get some commentary as far as how they are looking at the future in their readings with the PCE and all that kind of good stuff. But we are seeing that deflationary pressures are starting to kick in, and we know that oil has been behaving quite well. So everything here just looks pretty standard. Can things fall apart? Yeah, most certainly, but I don't I don't think Powell or the Fed will be the catalyst. The other catalyst that would have to happen is if if there's another bank that just completely falls apart. Looking at the SPY, the Qs, even the Dow, the HYG, and now the bonds, that gives us another check mark in our toolbox with the argument saying, okay, things are ready to continue to push on up. If we take a look real quick at crude oil, you can see that, yeah, we had this little failed breakout attempt at the 82.64 mark. We just kind of bunked our head at the daily 200, and we've pretty much given back the entire move that we've had on that surprise OPEC plus cut. And seasonality tells us that crude shouldn't do too much until we at least hit the summer months, and that's just based on our seasonality data. So for now, crude oil just kind of stuck in this box between 82.64 and 71.70. So nothing too crazy going on here. Let's see. So the main focus seems to be the market definitely looks better this week than it did last week. The main issue that I do see is the IWM. But and then we have to ask ourselves what is telling the truth. If HYG wasn't holding structure, then I would argue that the IWM is telling the truth and not the HYG. But because the HYG is holding its own structure, and even though it's not like blow your hair off bullishness, it's definitely on the correct side of things. I believe that the QQQ is the main bright spot within the markets, as well as the SPY, especially since the SPY closed above 314. And overall, the bonds look good. So we have all these check marks. We got SPY, the Qs, the bonds, HYG. Everything is implying that things want to move higher. Of course, that's not a guarantee. Like I said, the probabilities of things moving higher, most definitely like a 70-30, give or take. But, trade accordingly and know when you are wrong. So, yeah, this was a quick overview of the broader markets, and everything looks to be moving right along swimmingly. We do have some big earnings this week. Starting off with AMD, Ford, all on Tuesday. We got Starbucks on Tuesday after the bell. We got a few energy guys, BP. We even have Pfizer Tuesday before the bell. Wednesday, we got Qualcomm, Etsy, Estee Lauder. Let's see, CBS. Apple is, of course, the big one on Thursday, followed by Coinbase, Shopify, DraftKings, Lyft, Carvana, Chevron. All these guys are on Thursday. And Friday looks like we have a few ape names, AMC, Fubo. And then we have Cigna kind of tossed in there. So, yeah, it's a busy week as far as the earnings calendar goes. As far as the economic calendar, it's an even bigger week if we want to take a look at that. Bigger week as far as the economic calendar. We have some ISM manufacturing data on Monday. And then Tuesday, we have the JOLTS job openings. That's going to be a big one. Wednesday, we have the Fed rate decision at 2:00, and then Powell comes on at 2:30. Also, we have the services PMI, ISM non-manufacturing PMI. Big day on Wednesday. Then Thursday, we got follow-up with jobless claims, non-farm productivity. And then, of course, Friday, we have the non-farm payroll. So, yeah, it's a busy week, not only just for earnings, but as far as the economic data goes. So, like I said, on Wednesday, I'm not really expecting Powell to say a whole lot. I don't really think he has a reason to be hawkish, and he's going to have to play a fine balancing act to get us through. And one of the big things that we will definitely have to watch is the rate probabilities here. If we take a look, we know that there's most likely this should be 100% that they are going to do 25 basis points, unless something completely breaks between now and Wednesday. That does seem to be the case. But if we start to tinker out and look at some of these further data, we do have the probability of another 25 basis point rate hike. I think that's going to be an interesting one to watch. as far as the forward thinking goes, if they want to do another rate hike in June or July. But then once you start to kind of creep up into like September, and not so much September. Well, we still got about a 40% chance here, it looks like, for a September rate hike. But then once you start to get into November, you start to see these numbers go up just a little bit. 36% for that's a 25 basis point from this time frame, and then maybe even more in November. So we'll see. This is definitely going to be the key part. Definitely December. It looks like they're coming down a lot here in December. So we'll see. This is definitely the main tool I'm going to be focusing on as we get the FOMC minutes, and then we get Powell, and to get that reaction to see how things want to go. But the rate probabilities is one of the big things I'm going to be watching. So yeah, the markets had a pretty big move last week, and it could be on earnings as well as the forward looking into the FOMC and Powell, and we have to be on guard, because is this going to be a buy the rumor, sell the news event? We shall see. And in which case, everything still suggests that even if we do get a dip, the dip, should definitely be bought because of structure, and momentum tells us that, everything's looking pretty good. And it's going to take a lot for the bears to kind of just shove things down. So we'll see. But for the time being, everything seems to be in agreement. I don't think I can stress that enough, that everything's looking a little bit good here. So now I will say that tech is definitely a crowded trade. Big tech is definitely crowded. And, we'll just have to keep our eyes for any kind of sector rotation. If we do watch any kind of sector rotation, I think my eyes are definitely going to be on the XLV. The XLV is starting to get a little bit interesting here. We do get a little bit of a daily squeeze. Our oscillator is in a neutral positioning, but if we can start to push on ahead above this 135 level, I think it does set the stage for things to potentially move higher. And it definitely benefits when tech is generally down. So we'll see if we do get any movement here. I'm definitely going to be watching Humana on that aspect. Humana is looking pretty good. It had a huge push off of earnings, and let's see, we know that Lilly has done really well. All-time high breakout name, just continues to push on ahead here for that. So definitely going to be watching those names. All right, so I'm going to take a look at some of these ticker requests that y'all got for me. So let's kind of take a look here. Red Green coming out with JD. So let's take a look at JD.com. Let that load. All right, so first thing first, we do have earnings coming up, not this week, but the following week. One thing that we need to look at first is, okay, what is the overall trend? And just at a quick glance, I can tell you that the trend is lower. You can see that we have white below blue, blue below red. So this is the 21 EMA, this is the 50 SMA, this is the 200 SMA. This is what I've been using for quite some time now. But I always want to elaborate in case anyone was wondering. So here on JD, overall downtrend, we have a declining 50 SMA. It seems like every single time we kind of come down into support, it just kind of keeps breaking lower. This is why we don't try to catch falling knives. It does look like you are trying to form a bottom down here at about 33. I'm not too sure what's going on. This thing used to be a lot higher. Well, that was during the COVID era, but since then we've definitely degraded so far. But looking out here, we don't have a squeeze just yet, and this is bearish, and we have active sell signals down here. So if anything, if we do get a rip to the upside between the 21 and the 50, then I would look to short this back on down, because nothing is really telling me to get long. Let's go over to the hourly real quick here. Hourly, okay, the hourly is a little interesting, but still bearish nonetheless. Let's see. I'll show you what I'm looking at. So we have a little bit of a positive cross here between the 21 and 50. So that's technically bullish, and we have active buy, but this is still pretty bearish. The red line should act as resistance before coming up. So we broke above the 50. Usually when it starts a new trend, when it tries to start a new trend, it sort of doesn't trust itself just yet. So even though we've broken above the hourly 50, I imagine this kind of comes back in and at least gives us a retest and then see where it wants to go. And if it does want to push higher, watch this hourly 200. That would be the next level, but it's a little bit tricky here. We'll see if this level here, let me zoom in here and get rid of the yellow lines. Let's go zoom in just a little bit. Zoom out. Let's go here. Yeah, that 35.78. We'll kind of see where we rejected it already. Just not much, but it wasn't an aggressive rejection. So we'll see. As far as I'm concerned, though, it's an overall short than it is a long. It's getting a decent bounce here. The question is, how much of a bounce can it get? And then if it starts to show any new weaknesses, if we get into some sort of hourly squeeze. If we start to get into an hourly squeeze, I would start to look at maybe starting a short position. But I would argue, though, you do have this weekly hammer. So if you get that weekly hammer confirmation, sure, that could send you back up to the upside. It's definitely extended to the downside. You have a lot of air. Let me throw in the Keltner channels here. I imagine we're way down here at -3. Yeah, you're at -3 ATR. So if this thing bounces, you're looking for like 38 to 40. And then your reversion to the weekly mean, even since you back up to the 45. So yeah, that could be your possible if you want to try to buy the dip here. Know when you're wrong. And if you're wrong at 33.50. That would be my case there because it's definitely very extended to the downside. I just wish I had a little bit more of a signal here to get you going if you want to try to play the long side. Other than that, I would try to look for a potential spot to get short, but a potential spot to get short is possibly a little bit higher, 38, maybe even 41. But even still, you could play the long side on that bounce too. So you're wrong below this low, 33.50 on JD. Hope that helps you out a little bit there. Let's see. Let me get rid of this study so I don't have a bunch of lines all over the place. Okay. All right, let's go over to let's see. The next question was Disney. Yeah, the Mickey Mouse, the most annoying trade on the face of the planet. All right. So here on Disney, zoom in here. You have that same pattern that we have pretty much everywhere. You have this nice little channel here. Unable to break all of this mess for quite some time. And we pulled back. We even had a nice daily close below it. And that's when we started to get our reversal. So you had a bear trap here set in place, looking like it was just going to roll over with a daily squeeze. You also had active sell signals here. But now that we've got that trap set in place, if we redraw these levels, now we're back above. In fact, we have our first daily close above the 200. We still have the daily close. We had good volume here. What I would like to see is if we get a nice up arrow here within the next day or two. And then I would be looking for a move at least to 104. It looks like 104. And then you have the upward range of about 107. Let's take a look at the hourly chart here. The hourly, you have the bullish cross, and you kind of see things are a lot better than they were. You have white over blue, blue over red, and even the hourly 50 is starting to curl up. If you do get a pullback to the hourly 21 here, which is right about that 101 area, that could be a good dip buy to shoot things higher. You do do have earnings coming up. When was their earnings? Let me see. Earnings aren't until next week. 510. Yeah, that's next week. 510 for next week and looking pretty decent there as well. So yeah, nice bullish close here on Friday. Good volume. That would suggest that things want to go higher here. The weekly is definitely a mess. I'd give it a check minus. You starting to get that 21 crossing above the 50, so we'll just give that a check minus. This is bearish, but you have an active up thrust signal here. So definitely something to pay attention to if we can continue this momentum within the market and FOMC and Powell, Apple earnings. But we already know communication sector is doing really well. Google, Meta is looking pretty good here too. So the XLC is actually leading alongside tech. So keep your eyes on the XLC is definitely outperforming. You can see that we had that same situation here. We had this nice channel set up, had that close below it, and then they just bumped this thing on up. And yeah, that's definitely the main story here is bears got absolutely caught with their pants down. That's exactly what happened there. Let's see. We have Apple next on board. Apple earnings on Thursday. We know anytime we get earnings, it pretty much throws technical analysis out the window. But what do we have here? We have bullish structure, white over blue, blue over red. We have a bullish oscillator, and we've had bullish thrust all the way back from March 6th. So we've had an active buy signal here all the way back on this dip here. So you can see that we've already made an incredible stride here where, let's argue here to here. Excuse me, I didn't even catch that number. Let's see, 14% off that one move. Just absolutely incredible. Could we be, forward, looking on that earnings report? Maybe. Everybody else has had good earnings report. Why not Apple? We haven't really heard any too much negativity coming out of Apple over the latest, except I think the latest I heard is that there is going to be some kind of headache with them shifting from moving some things from China to India, and they're having some quality control issues with India. But other than that, I haven't heard too much. Maybe their next iPhone will be different. Maybe. I doubt it, but we'll see. Place your bets on that one. But for the most part, we have bullish structure. We have bullish momentum. We're starting to enter a squeeze. Now we are a little bit extended. It's hard to buy up here, even if we look. That hourly's not too bad. Even if we look at the hourly, if we do get a pullback, it still suggests that the pullback should be bought. There's, I mean, this thing looks absolutely ridiculous. And that kind of reminds me, when I look at the ES, I'm going to show this earlier. Let it load. Okay, so if you argue that this is a bull flag on the ES, however you want to draw this, say this is a bull flag on the ES, that would put us up here in the 42.20 range. So if you don't think that the market doesn't have much fuel, it most certainly does, because the pattern is set up for things to go higher. Now, of course, if we start to break down here, that's when we are wrong. So I'm definitely going to be watching this hourly structure here on the ES. So looking at Apple, yeah, this thing looks like it could be setting the stage to push on higher. Although I would like a little bit of a pullback, kind of like how we got on Friday. But for the most part, Apple has been a very strong name, even when we pulled back on Wednesday, Thursday. Thursday, it held the daily 21 and even closed higher than its open, and we pushed on higher from that. So Apple looks pretty resilient here going into earnings. We'll have to pay attention to the Apple options flow to see if there's any clues as to maybe even some big bets coming on through. So we'll see as far as that goes. But yeah, everything's looking good there for coin. Excuse me, for Apple. Moving on to Coinbase. Yeah, I actually like, what's bad. I like Mara and Riot more than I do Coin. Coin does not look good by any means, and it has earnings this week. Yeah, it has earnings this week. Coinbase, sure. Messy structure, but you do have this declining 21. The 50 is kind of flat, but it's starting to curl. You're below the 200, and when you're below the 200, that just means you're on the wrong side of things. It's like you're below the equator, so to speak. So if you're above the 200, that's bullish. Below the 200, that's bearish. So you're below the 200 here on the Coinbase. And looking at the weekly, it's not giving you any kind of, fun readings here as well going into its earnings. If we start to break down below 51.50, then this thing can definitely move lower. It's not extended by any means. You did have a nice little hammer print on the daily, but there's just not a lot of volume coming in. You had some big volume last week. Let's see, Monday and Wednesday, big volume here. And since then, it's just kind of been dying down as far as the excitement here. So, if anything, I'm looking for this thing to trade lower on Coinbase. But when we compare, if we take a look at Bitcoin real quick, just to kind of compare to see what's kind of going on with Bitcoin. Bitcoin hasn't really made much progress since it had its nice little break above 29. So if Bitcoin can get back above 29, then I don't think there should be much trouble for it to push on up to 32, maybe even 35K. With that being said, why is Coinbase trading below its main moving averages and looking like it wants to roll over some more? We have bearish positioning here, and we have sell signals here on the daily. Even the squeeze momentum is still pushing negative here as well. Starting to enter a squeeze on the weekly, but there's not much juice here, so to speak. If I look at Riot, let's look at Riot. This one's on my watch list for this week. Riot, look at this trend. It's a different story here. You have white over blue, blue over red. This is serviceable, and we have an active buy signal here, and we have weekly signals here. This is neutral, and everything's looking somewhat okay. I'd give this like actually I wouldn't give that a check. I'd probably give it like a X. But it's a lot better than coin. I'd argue if you get a break above this 12 level, sure, why not come all the way up to 13, 14? So Riot looks really good in comparison. Let's go over to Mara. Same thing here. You had this nice breakout, big push to the upside when Bitcoin was making its push above that 29K level. You've retraced back down to the 21. You've held, and this is neutral, but you have an active buy here. You're starting to have weekly sell buys here. If you can get a push above this 1050 11 mark, we're starting to look for maybe retest 12 a little bit. But I definitely like Riot a lot better in comparison to coin. Let's check see. Let's see, do they have earnings maybe this week? I have a question mark, so we'll see. Can you clearly say what the blue? Yeah, white is the 21 EMA, blue is the 50 SMA, and red is the 200 simple. Some people use more, others use less. I have found that these work best for my style. So it's all up to you. 21 is my reversion to the mean. On the intraday, you could use an 8 EMA, which is your fast moving trend. And those are all based on Fibonacci. You got the 8, the 21, 34, 59, and 53 and 89 EMAs. Those are all based on Fibonacci, but yeah, 21, 50, and 200. And then this dotted blue line here, that's a year to date VWAP. So I have an anchor point on the year to date right there. All right. So moving on. Let me show you something that I'm watching. NVIDIA. I like NVIDIA and AMD. I like them both. NVIDIA, nice push down and then hold. And looking to see if we can't get a push above this 280, 283. If we can get a nice push on up, if semiconductors want to cooperate, then we're looking for a move probably to retest 300 on NVIDIA. We have the bullish structure. We have, we've been holding the 21 EMA. It's just been kind of consolidating through price and time. There's your 50. There's your 200 way down here. We do have a daily squeeze. That's a nice little bonus. This is bullish, and this is definitely bullish. We've had a buy signal since all the way down here. So yeah, everything's looking really well here for NVIDIA. Same thing here with AMD. This is also another one that we are going to be looking at this week as well. I think this one is also on Callan's watch list. You have this nice little trend line trying to break out. If we do get a break above 90, then I think this does set the stage up to kind of push that 95 area. You retraced all the way down to the 382 from this low here to the previous high. You've retraced, you've bounced off of that, which is good. And that also gave you a bounce at the year-to-date VWAP, so that gives you a nice another angle to kind of take that approach. This is bullish. You're starting to get the squeeze on the momentum shifting from red to yellow, and you're starting to possibly enter a squeeze here. I would like to see an active buy signal here. That would be icing on the cake. Let's look here on the hourly structure as well. You do have a crossover of the 21 and the 50. I imagine we do get a pullback to maybe retest that, and then we can go and retest the hourly 200 up at 93. So that is definitely what I'm going to be watching here on AMD, maybe a retest and then a push higher. Here, you even got some very nice active buy signals here on the hourly as things try to correct themselves. Ideally, you want to see yellow go back above red. But yeah, the momentum's good here on the hourly. So watching AMD, let's see, NVIDIA, AMD, Disney, Google is on watch as we had this, push down here. This is where, we got stopped out, or I got stopped out at least. I don't know if any of the other guys are holding, but I had to respect my play here and get out. And plus we had earnings, so I couldn't really hold it through earnings. So if you are holding, guts galore. Now this setup is still bullish. We still have white over red. Well, we still need to see blue come back up top. So we'll give it a check minus. That will eventually happen, of course. This is bullish, and we have an active bullish signal since this low here on the 21. If we do get a push above 108, 109, then that would take us back above the 382 retracement and get us to at least the 50% retracement, which is all the way up at 117. So the potential here is pretty good. You have good volume coming in over the last recent days. You have a daily squeeze, which is a nice little bonus. Let's look at the hourly at least to see where things are looking. Hourly structure is good here. This is bullish, and you have a bullish thrust signal here, and momentum's looking pretty decent as well. So you had a nice little pullback to the hourly 50, and then you're bouncing off of that. You get a little bit of a gap fill there. Yeah, the question is, can we break above this 107, 108 level and then push on higher? So Google's going to be an interesting one to watch this week as far as the big tech guys go. Also have Meta, Oracle. We also look at Visa. These are all XLK names. Visa, watch for that break above 235. We have good structure here. We have bullish here. The only thing I'm missing is maybe a white arrow, and we have a squeeze as a bonus here. Weekly, we got the bullish thrust here. This is neutral bull because we are above the 50, and we got a squeeze going on the weekly. So Visa's looking pretty interesting, considering the economic conditions of everything. Let's see. We also have Merck, MRK. This is going to be my XLV name that I'm going to be watching. Nice bullish trend. He's starting to break out here. If we can get back above 115.50, this has been a strong name in the past. We've turned sideways, and now it looks like things are starting to heat up yet again. So I definitely like the looks of MRK as we set things up. So if we do start to see that sector rotation, going to be watching that. I got Mara and Riot on there. I like the look of Coke. We know Pepsi has been breaking out. Pepsi has broken out into new all-time highs. Starbucks has been breaking out. Hard to chase Starbucks here. I would like to see a pullback. Starbucks, let's see, their earnings are on Tuesday after the bell, and they have a dividend coming out as well. So it's a little bit hard to chase this move. We'll probably just have to wait and see what happens on earnings. LMU is another one I like. I know this is another uh, semiconductor name, but if we can get this break above 64, we'll call it 65 even, then yeah, we're poised to make a move towards at least let's see, we can probably argue 68 and then 71. So LMU, this looks like a fun play to participate in. We have white over blue, blue over red, entering a squeeze that's trying to do something there. This is neutral bull. This is an active thrust signal. We have weekly buy signals here. This is neutral, and we're also entering a squeeze here. So yeah, this key level here at 64.84 looks like a lot of fun. Definitely keep an eye on that. Bearish, utilities, industrials, TAN, XLF. The only XLF that I like is Berkshire. This thing is a beast of a chart. Warren Buffett continues to be quite impressive as it continues to break out above that 320 level. Next stop for this is really the 340s. This thing is just a really, really nice chart. If you take a look here on the weekly time frame, you got that nice structure going on. So we give that a check mark. You got to squeeze. That's a bonus. This is bullish, and we have active thrust here. So we got a check and a check. I mean, there's no complaints here. No complaints whatsoever. And if we pull up the hourly chart here as well, you can see that the trend continues on the hourly time frame. Just fantastic looking chart here for Berkshire. All right. Any questions, concerns? Did I skip anything? Did I skip anybody? Oh, I think Bose said, is Bose here? Okay, Bose had asked me in my channel, hey Fuzz, Sunday Night Prep, can you go over which option you would buy on a swing trade and why? All right, so as far as swing trades go, let's say I was looking at, let's just take Berkshire since we got it pushed up real quick. So on Berkshire, so we got our trend, we got structure, we have good positive movement here. All right, say if I were to be looking for some more upside, first thing is what I'm going to do is pull up my monthly options contracts first. I need to see where all of our participants are at. And there's a few ways we can do things here. And that's if we take a look at the options chain. Let's see. First, you want to find some good open interest here, and say if Berkshire is trading at about that 330 level, and we think it's going to move towards 340. Looking here at the options chain, my rule of thumb is you either go at the money, which would be your 330 contract, If you can, go in the money and get close to 70 delta. If you do want to go out of the money, I don't suggest going too far out of the money. Like I wouldn't be grabbing these 345s just because it's cheap doesn't make it a good contract. Uh, I would be going at least, maybe one, no further out than two. So that's 335 would be my last resort, but I would definitely look at buying the 330s. That way you start to take advantage. You get some decent delta, and then as the price moves in your general direction, uh, that delta will just start to get better and better. And then of course, if you buy the 70 delta, I mean, you're pretty much, say if you buy the 325s for $8, you're getting 70 delta. Uh, but as this starts to move up, say if price moved up two strikes, so let's say we're trading around this, let's say we start to move towards 335. Your 325 call option is going to be getting around 80 cents delta. So for every dollar that the underlying moves, you're pretty much making dollar for dollar on your option contract times 100. So that because it's a derivative, it's got a multiplier of 100 because you're controlling 100 shares. So that's how I look at it. Or of course, if you want to do spreads, say if you're bullish on Berkshire. All right, if you're bullish and you want to do a spread, you can do a debit spread or you can do a credit spread. You can also do a butterfly. 70 delta because the price moves fast? Not necessarily. Even if you can afford a high delta, grab the high delta. I would argue grab the high delta. A lot of traders out there definitely argue grab as much delta as you possibly can. Experienced traders get time and get delta. The further out, the better. That way you can fight against theta decay and you can continue to milk it. So say if you're bullish on Berkshire, you can either pay a debit or you can get paid a credit depending on how you want to do things. So say if you're bullish on Berkshire and you think, well, okay, well, this thing's going to 340, but looking at these contracts, this is, maybe, if I buy the 325, that's going to cost me $8. That's a lot for your account and you don't really want to fork up $800 just for one contract or however many lots you want to yeah, $8, so it'd be $800 to get into this contract. So say if you're like, okay, that's too expensive, well, you could just go into a debit spread. So you could say, well, what if I do a 10 wide debit spread? I'm going to buy a vertical and I want to buy the 325 and let's see, I want to sell the 335. We're bullish, but we're not. So this gives you a 10 wide debit spread. This lowers your cost to $5.38. So it's a little bit better than paying $8. The only issue with buying a debit spread is that you limit your upside. So the potential profit is the width of your strikes minus the premium paid. So if we're doing a 325 and a 335, that's a 10 wide spread minus $5.38. So that gives you a potential upside of $4.62 as your max profit on expiration. So it does limit the risk that you pay per contract, but it also limits your upside potential. So say if Berkshire skyrockets and trades to 350, it doesn't matter. The most you can make is this 362. Can you auto sell contracts like stocks? Yeah, there's a way to set that up. I'm not going to get into that here because that'll be another hour-long discussion. If you have TOS, there's a lot that you can do. And then, of course, if you didn't want to pay a debit, you want to bring in some credit. You'd rather bring in some credit. So you go over to your Berkshire chart and you go, okay, so we broke out of this 320 level. broke out at 320. We came back and retested it, and we held. So that's pretty good. So support's down here at 320. So let's say, we're bullish on Berkshire, and we think that it's going to at least trade above 320 by expiration. Let's see, you could come up here and say, okay, well, I want to be paid a credit instead of paying a debit. You can say, okay, well, I'm going to sell a vertical. I want to do this 320 and 315 just as an example. It's not much. You get 73 cents credit per contract. So by May 19th, if Berkshire is trading above 320, you get to keep the entire 73 cents. Now, on that trade, I would wait for a pullback. I would wait for another pullback just so you can get more premium into your account and see if it launches back above. And then your stop is, of course, slightly below that 320 mark, 319.50. Lots of ways to play the game, all based on the key levels there. Yes is a good answer. Yeah, TOS, you can do a lot of automation. It takes some time to kind of get set up, and I'm a hands-on approach guy, so I manage all my positions accordingly. But it definitely would make my life easier if I did that for sure. That's for sure. Yeah, I just haven't like sat down to actually do that. Although it would help. It would come in handy. No doubt about that. Monthly contracts is for newbies. And no, monthly contracts are good. The more time you get, the better. In fact, there's probably more open interest in those monthly contracts. You're probably going to pay a little bit more for that time, depending on which monthly contract you are looking at. And never do naked puts. Yeah, never do negative puts unless you want to lose your house. That's when you get margin called. Yeah, don't do anything. Yeah, time. Yeah, what Plumber said. Plumber's a good advocate of this. I've seen him post. If you show us your gains, he goes out and grabs time. Time is your friend. So if you can get those monthly contracts, play the monthly contracts as opposed to the weekly contracts. Even on my plays, if you see me play weekly contracts and you're not comfortable with doing weekly contracts, in fact, if you're a beginner trader getting into options, don't do weeklies, do monthlies. So avoiding major mistakes. Yeah. Keep on learning, keep taking notes, dabble in some paper trades, get your feet wet, so to speak. But yeah, definitely don't rush into to options. My first options was in Ford. I started out doing options in Ford, then I progressed from there. Got some people talking, typing. All right, I'm making sure I didn't skip anything. Yeah, everything's looking good. I'm going to go ahead and send you guys my notes just so you have them because I haven't sent them out yet. Let's see here. Let's upload documents. Did it not say? Yeah, there it is. All right, there's the weekly notes posted there in my channel. For Ford, did I just get comfy with the stock and stick to Ford because you knew it better? Yeah, no, I chose Ford because it moves slow. It's not a high beta name where, you get these crazy price action. Ford moves like a snail. It moves like a dime or two. Its daily ATR its weekly ATR is only $1. So it moves very slow. You can buy cheap monthly contracts. Let's see. Let's pull this back up. You can buy, let's say we're looking at the May contracts. You can buy a May $70 delta for a buck. So they're really cheap to play, and you get the feel for the price movement really easily. As far as the options goes, of course, if you play that $11 call, if you're trying to make a move all the way up to 12, almost $13, that's going to take some work for Ford. And once I got comfortable with it, then I moved on to like Twitter. Still a good place to start Ford. Yeah, they're very liquid. They're very cheap. Uh, Monthly contracts, May's. At this point, I'd probably look at the June contracts, and they're still cheap. If you look at the June contracts, let's see, that 11 contract, instead of $1, they're $1.30. So you're only paying a little bit more for the premium. As far as the call side, now looking at the 4 chart here, you do have earnings coming up. Just a heads up if you want to wait till after earnings to kind of dabble or whatever. Looking at the chart here, it's kind of sideways. Not much to write home about. So you just kind of have to maybe dig around to some cheaper names. I mean, even Riot and Mara, they're cheap as well, if I look correct. Let's go to Riot real quick. Start a riot. That's a rock song of some sort. Okay, Riot's a little bit more expensive. You're looking at about $3 on those June contracts, but you're about $1.50 on those Mays. So you just got to be like define like what you're comfortable with on playing around. Ford, you probably do GM as well. Any names like this are pretty easy to look at. You got earnings out of the way on GM, so that's great. So I'd probably play GM instead of Ford here. They're kind of the same cost basis. About $1 for the right in the money, and then about $1.60, $1.70 for the next month. So if you want to dabble, pick something that's kind of boring. GM's boring. Coke is boring. KO is really cheap. A nice uptrend. XLP, you're in the right spot here if things want to progress forward. And Knowledge plays Coke a whole lot. AEL, yeah, Sammy. Yeah, AEL is a good one. Delta, any of the airlines are pretty decent. Coke, you got earnings out of the way. You had a nice little pullback. Yeah, all depends, what if you want to dabble in options. Just find these like boring, slow moving names and just kind of play around with it. Have your levels marked, support and resistance, and if you get stopped out, you get stopped out. It's no harm, no foul. Yeah, and you kind of need to define that based upon your rules. My rules is I don't average down. Like if I average down, then it's risky, or I better have a really good darn reason to average down. Average down is risky. It adds more risk to the table, and you just got to ask yourself, should I add that risk on the table? Should I put more poker chips out there? Or should I just get out and wait for a better time to get back in and make it up that way? So AAL, you had a nice little push here off of earnings. NVIDIA, looking for that breakout above 280, 283, 270. Excuse me, that's the wrong way. 290, and then 300 on the upside target on NVIDIA. Yeah, there's 2 ways you can play this. You can wait for this breakout because we're technically still kind of in this Darvis box. We don't have a breakout quite yet. But I don't have anything to tell me that it's bearish. We still got the daily squeeze here. This is bullish. This is bullish. We have positive thrust signals on the weekly. This is bullish. Neutral bull. Structure, check. Check, check. check, check. Structure is good here, check. So we have good signals here. We just need to break a key level. 280, 283 is your zone there. If you want to wait for the breakout. Now, if you want to speculate to get out of this Darvis box before FOMC, before Powell, uh, then you can. You just got to know when you're wrong, and you're wrong when for me, I would be wrong like at least right here, especially if it's a short-term trade, 268.50, and then you're very wrong if you break below 262 on the opposite side of that Darvis box. But of course, if you're playing weeklies, you're kind of kaput down here, so you got to be a little bit careful. But if we look at the hourly chart here, just to kind of check in on things, hourly and the 30, this is looking pretty decent. A little bit extended, like everything else. A lot of tech is a little extended, so a pullback would be kind of welcomed, and then we kind of thrust from there. It's going to be an interesting week, especially with Powell on the books. So let's see. You got a nice little push here. Nice move here. This is starting to curl. That's good. That's good. So pull back to at least that 275. Looks pretty good to push on back up to that 280. And then from 280, 283, 283, 287, 287, 290. Yep, there you go. You got it. 268 was going to be your entry. 21 EMA. Yeah, even the 30-minute looks really good. Look at that. Starting to do something here. So Nvidia looks good. AMD looks good. I haven't looked at Intel. Is kind of why MU looks really. I like MU. MU looks like a lot of fun. Intel has issues. Intel has issues from a fundamental standpoint. We know that Intel had their worst report ever, so that's exciting. But you had that nice positive move off of it, so there's that. Because we live in crazy times. So yeah, Nvidia, you can either play speculation that it's going to break out, or you can wait for the breakout. And I would argue possible divergence here. So you see how we haven't really broken out here. So let's throw this in the toolbox. You haven't quite broken out here, but you're strangely making a higher high here. That's kind of weird. So this is divergence. Kind of want to be mindful of that. This will take time to resolve itself though. So it's not an immediate like, oh no. It's just something to kind of be mindful of it. This can correct itself. This can be self-correcting. So I'm not too concerned of it. Just kind of watchful of it. MU is going to be your number one going in. Yeah, I like MU a lot as well. All right, we've kind of gone over the 1 hour mark. Sorry about that, but I appreciate y'all sticking with me. I appreciate the questions too. Great questions. Thank you, everyone, for coming out to hang out with me tonight. I hope you took something out of it. I'll get my watch list posted here in just a moment for tomorrow. Busy week ahead. All eyes on Powell and what he has to say. 25 basis points makes sense. The Fed's going to keep on doing something until something breaks. Some things have kind of broken, but not really. We're starting to see those deflationary aspects come into fruition, which is good. Short term, I think we're in a good spot. I think the bulls are in a good spot here as we get moving along. And then we'll just kind of, keep our heads level and play the charts, play what's in front of us. And I think that's the key point too. Everything's set up to where you can literally look at the charts and play what's in front of you. But just kind of be mindful of, what's ahead on Wednesday for sure. But all right. I appreciate y'all. Thank you, Plumber. We'll be here in the morning and we'll keep it going. So let's take a look real quick to see how futures are holding up. All right. Let's see. Let's go over to, let's see. Let me pull up this chart here and go over to the ES. Still flat. We haven't made much progress. Let that load up. And you can still see here that we're still holding the 15-minute 21. So everything is still pretty good. We've tested it here. We've tested it here. We tested it back here. We're just kind of holding trend. Nothing too exciting. Even the 5-minute has kind of fixed itself a little bit here. Got a high compression here. It's not my favorite. But that's just kind of nitpicking. I think this is still bullish. And yeah, everything's looking fine. 15-minute. There you go. There's your next push here on the 15-minute ES. If you can get a breakout above 4190, 4188, maybe we'll retest the overnight high. All right. That'll be it for me. You said show notes. Those are in my watch list channel. If I can post it. Watch list, Fuzz. It's in the grill channel. There you go. There's a link to it. And if you don't have that, I think you have to activate your channel. So if you haven't done so, activate your channel from there. All right. If you have any questions, feel free to ask them away in the Ask Me channel, or feel free to shoot me a DM. Always open. But all right, y'all have a great evening. I'll see you guys in the morning, and we will get at it bright and early. Take care, guys. Thank y'all.